So, welcome everybody. Thank you so much for being here. This is Money Talk for Sapphics, and it's a live informal panel talk where we really focus on the areas of finance, particularly for women loving women, and the additional challenges that we have because of who we are. So I know there's a couple of allies in here today who want to understand a bit more about sort of the challenges that we have. So thank you for being here too. So I am Verity Brown. I am a money mentor at Women's Wealth Financial Planning. And today I am joined by Deane, who is a mortgage advisor at Yes Mortgages Limited, and Davinia McGann, who is accountant and founder of Damn Good Business. Welcome.
Thank you.
And all our pronouns are she, her. So just so you know. So we are recording this session. So we will be sharing with you the recording over the coming days. And with that, we will also email you anything that has come up during the session that we may think is useful for you to have a link to, any resources. So we'll see how it goes and we'll adapt to that session. Okay. So, in terms of just general housekeeping, cameras on or off is fine. We have sort of set everything to mute just because it's a panel talk, but the chat is always open. So, if you have any questions, please ask. We did get some questions before we started through the booking form. I will try to get round to them. If we don't, we have a way that we will get those answered for you in some form or another. And like I said, we'll just see how the flow goes with the conversation and what comes up. Okay. And just to so point out that everyone is welcome here. We made it very clear when we were talking about the event that whether you're a single sapphic, or whether you are in a same-sex female relationship, you're very welcome because we are affected in similar ways. And yeah, no matter sort of how you identify, or whether you're employed, self-employed, wherever you live in the UK, you're welcome here. So we just want this to be a safe and supportive space. So I am just going to share a slide just in case you want to start looking at who we are and sort of start following us. So let me just pop that up for you. Okay, so you can see here who we are, and there's also some QR codes there that will take you to sort of the main place to find us. But I'll also pop this slide up back at the end. Okay, so you've got some time to take a picture of those QR codes again. And before we kind of really dig in deep to the talk, I just want to bring your attention to this disclaimer. So the session is for general information only, and the content shared during this panel discussion is intended to provide general information, personal experiences, and education. It does not constitute as personal financial advice, tax advice, or investment advice. Financial decisions depend on individual circumstances, and if you are unsure about any financial decision, you should seek personalised advice from a suitably qualified professional. So that's the boring bit out the way. So let me stop sharing and come back to us. So, I suppose the real reason why we're here is because we want to discuss why do Sapphic women face more financial challenges than straight women, and why does this need to be talked about? So, Davinia, I'm going to throw it over to you.
Thanks, Verity. Hi, everyone. Welcome. Good afternoon, good evening, whether you're watching live or catching up on the recording. It's a real honor to be here, very proud to be part of this conversation. So thank you, firstly, Verity, for facilitating and getting us started. Um, so my background is as an accountant and business coach for predominantly female and LGBT businesses. And my perspective is that there is, the gender pay gap. We often hear about that starting out with having less, whether it's how we are paid or how we are charging, challenges with underconfidence. And when you are in, for example, a dual woman relationship, you're going to have that twice over. So you kind of don't get the compensation you might see in some of the other types of male-female relationships. And ultimately, that means that you have to work harder and your finances have to work harder. So, understanding your numbers, whether that is as an employed person or as a self-employed person, is not really optional, but actually essential. And I'll be talking a little bit more about that as we go through. Um,
Yeah, sounds great. And Elle, what are your thoughts on this question?
Yeah, echoing thanks for facilitating this, Verity, and for the warm welcome. What you'll hear a lot of over the course of this session is in reference to the gender pay gap and three different perspectives on that and how it affects Sapphic couples. So I too am going to be sort of leaning into that and explaining that a bit more in the context of mortgages and mortgage advice. Two potential incomes affected by the gender pay gap compounded in a Sapphic relationship. It is likely to affect borrowing capacity. Mortgage lending in the UK is really based on your income. And separately to that, something else that I'll touch upon as well, and something that comes up quite often with conversation with Sapphic couples is how we are funding having a family, what that actually looks like. The impact of potential fertility or adoption costs, fostering costs, etc. How couples look to make that happen. It's either utilising credit, it's taking money out of a property, or it's affecting our capacity to save for a deposit. So the topic, that's how it sort of leans into mortgage advice, and I'll be having a chat about those areas later.
Sounds great. Thanks, Elle. And yeah, for me, I mean, there's going to be lots of crossovers, but my sort of main reasoning that we need to have these conversations is sort of the gender wealth gap. And what I mean by that is where our pensions are at by the time we get to retirement age, and that real big gap when we don't have a man to sort of plug the gaps of our lower wages, of our breaks from our careers, maybe to have a baby or to look after elderly parents. And also, we don't have those conversations typically like men do about investing, about understanding what our pensions are doing, where they should be. So they probably may not have worked as hard for us over our lifetime as they could have done. So all of that, the sort of systems we're in, the sort of patriarchal and capitalist system that we're in, is affecting the wealth gap. And, like you've both said, it's a double whammy when we are two women. So yeah, lots to kind of get stuck into. I think I might just carry on with that flow if you guys don't mind, because I'm very passionate about it, as you can tell. So I've got a few stats here, just to kind of give a bit more context. When we look at why is the gender wealth gap more of an issue for Sapphics, so the gender wealth gap in Great Britain is around 21%, but nearly all of that gap is driven by differences in pension wealth. And I know pensions can sometimes seem the most boring subject, and I've been on record many a time when I was younger saying that I didn't care about them and they were boring. And it's probably one of my biggest financial regrets in dismissing pensions when I was younger. So I'm now quite passionate about talking about them, even though people may want to fall asleep. So please stay with me because it's really important. So, a recent report from Edinburgh University found out by the age of 60, women have around 75% less pension wealth than men. So, on average, they have around £19,000 compared with £75,000. And this is driven by pay gaps, caring responsibilities, and how the system is designed. So we're there doing the same job, potentially as a man. We're maybe getting paid a little less. Then we take a break to have a child. Then there's other things that we go through perimenopause, menopause, need to take time off work, etc. And then we end up with smaller pensions again because we haven't fully understood maybe how they work. We've not really known where to go and get advice. And it's really affecting us. And when you're in a heteronormative relationship, the man's pension can then fill the gap of the woman's and build it up. But when you're not, when you're two women or a woman on her own, then, you're really struggling financially when you retire if you haven't taken actions when you're younger. So this is sort of, I'm passionate about honouring the system that we're in. We can't change the system that we are in. And even though we feel like we're making progress, we also can feel like we're taking some steps back sometimes. So it's really focusing on what the practical steps are that we can take that empower us as women and as Sapphic women to, really, really make sure that we're building our wealth over our lives. So we're not struggling in retirement ultimately. So that's an area that I feel really, really strongly about.
I'll just say that Janet's just put a comment in the chat.
Mm,
Promotion takes longer as well. And I think actually, as queer
mm,
women, we may feel that, we maybe don't talk up about ourselves in the workplace as much, because we're maybe worried about drawing attention to ourselves and maybe not asking for that promotion or that pay rise. So it is definitely a compounding impact. But when Verity, you talk about kind of starting younger,
mm.
wishing that you'd look back, what does that look like from a kind of practical perspective?
Yeah, so I think we're all a bit scared of pensions sometimes, especially when we're younger. Like, as I said to you, one of my biggest financial regrets was sort of cancelling my pension, my first job out of university, which was for a university and which was a lovely pension agreement and would have been worth a lovely amount now. And I just didn't want £300 a month going out of my account, and I wanted that for very bad, cheap vodka on a Saturday night instead. And now I'm appalled by that decision. But at the time, I have a lot of compassion for that woman because she was never taught about pensions. She didn't understand that they were invested. She didn't know what they were. And I think we're in such a better place now to understand finances as women. There's so much more out there, but there's also some bad stuff out there with TikTok, and there's a lot of non sort of official factual stuff as well. So we have to be careful. We have to make sure we're getting our knowledge from the right sources. But in terms of, if I could speak to someone who was younger and trying to make changes, it's just really understand your pension, like understand, what it is, how much it is, where it's invested, what that looks like, how much it's going to be worth, like just sort of do the login and really understand and start understanding your pension. And you may have a few because we're a bit more sort of transactional in our career. You may have moved around, you may have a few, just find them, and all of this is like, yeah, it's not the sexiest thing to do. But honestly, your 65-year-old self will be thanking you for sure. So.
Do you need to be waiting until you're earning a certain amount of money to start investing in a pension? Because I know, particularly if we're worried about being paid less, not necessarily getting the promotions moving forward.
Mm.
And maybe, I'm sure Elle's going to talk about this, so I don't want to go too much into saving for the next little thing. Looking ahead to a pension could be quite scary, but is it even worth doing it if it's going to be a small amount?
Yeah, and I mean, I think you'll touch on this more, but obviously, if you're employed, there are certain auto-enrollment elements there. So if we have employed people here, they'll realize that they've been auto-enrolled into a pension. When you're self-employed, you have a bit more sort of choice on what you do. And I think, again, it comes down to the individual, but it's all about balance. You know, you've got to ensure that the primary committed expenses are paid for. But you've also got to ensure that pension payments come before sort of several holidays a year. Like maybe can you do three instead of four and make some nice pension payments? So it's all about balance. But the thing with pensions is they, are a tax wrapper. Like there's lots of advantages to building up pensions. There's disadvantages as well that they're stuck sort of for the most part in that a pension until a certain age, and it keeps changing. So I'm sure for us it will be older than we'd like to think. But there are disadvantages and advantages as well. But we do get a lot of advantages from investing in pensions too. So I think it is really assessing sort of what disposable income you have, what your current pension pot is, if there's any advantages with your employer in terms of contributing more. And we can share some things about how to decide, when is the best time to figure out when to either up your contribution, or just to assess when you should open that sort of self-employed pension. Yeah.
And starting to think about, again, some of the practicalities. If we have got pensions or potentially different pots in different places, how do we know that our pensions are in the right place and growing as much? I think Terry's commented about using, pension V in the chat,
Mm.
and trying to work out, where things are and making sure you've got one, but is it in the right place? Is it doing what it needs to do?
Yeah. So obviously, like the first practical step is to find them all. And I did this exercise a while back, and there are pension finders that you can use, but I actually didn't find it super helpful for mine. And my sort of approach was reach out to the HR sort of element of companies that I've worked for and ask, for some information. Then it's really sort of looking into the pension itself. So logging in, which is probably the hardest part sometimes, and, looking at it, but it can be really overwhelming. I don't think they make it easy and straightforward. So if you work for an employer, maybe they have someone who can guide you through it. Maybe they have a relationship with some form of financial partnership that can give you a bit more guidance on that, or ring the provider and ask them to explain things. But the things that you're really looking at is sort of how far off you are from retirement, because that will really affect sort of what your pension is invested in, and when you need to access that money. And also your sustainable investing views, which is quite a hot topic for women. The more and more women I speak to, more we really do care about where our money is invested. And it's finding a balance of getting the growth and the proposed growth that you want with also, aligning to your morals. But those are really the two key things to think about once you log in and have a look. And again, I can share more resources for people to sort of delve a bit deeper into that.
I was going to say in the chat, Janet's said she's very pleased she had no choice but to pay into the different pensions because it was
Mm.
compulsory for her. But that means that she might start trying that vodka any day soon. So.
Yeah. So hopefully that gives you an idea on the pension side. But I'm actually really intrigued by sort of the property part because I know from the work I do how it could be affected. But I really would like to hear in a bit more detail. So, Elle, how could the gender pay gap affect Sapphics looking to buy property, either as their own home or as an investment?
Yeah, thank you. There's in the timeline of life, it's hard, isn't it, to work out what to prioritize. Is it the short-term savings for, a deposit, home ownership? Is it overpaying the mortgage, investing the money, investing in a pension? I hope that between us we can unravel that knot for folk here. So as I mentioned earlier on, your borrowing capacity for a residential mortgage is directly linked to your earnings. So in the instance of the gender pay gap affecting a single person or a couple, the obvious effect is potentially a reduced opportunity to borrow a sum that you want to borrow. Stating the obvious, that means compromises by location or property style or whatever. The other interesting conversation that I didn't foresee when I moved into my role is, again, as I touched upon earlier, the idea of how we fund starting a family, and whilst perhaps non-Sapphic couples may be contributing purely to a deposit pot and a largish sum in the scheme of life to save up for that, we're perhaps thinking, okay, well, how much is best directed towards the deposit versus, I know of couples that have spent, upwards of 10, 15, nearly £20,000 on starting their family. There really seems to be no hard and fast answer as to, how much starting a family really costs. But, up to those sums, where's that money best directed? So in speaking about a deposit, it is the case that some lenders offer a 5% deposit, so you'd only need to save up 5%. There are some lenders that actually offer a 0% deposit product on very strict criteria. The point to flag in terms of opportunity and long-term effect is that a larger deposit, if you're able to save one, is it opens more doors. It opens more doors to better interest rates as a general rule. So how that applies with the gender pay gap, you may be affected with your borrowing amount. You may also be affected by your deposit amount with the opportunity to save and also funneling funds elsewhere towards starting a family. So I think that those, again, the gender pay gap is the big influencer here, and yeah, those are the commonalities that I see with Sapphics buying residential. Briefly on an investment property, some lenders will want to know that you meet a minimum income, which may affect some Sapphics in terms of in reference to that gender pay gap as well and that opportunity. So yeah, I hope that makes sense as an answer to that question.
Yeah, and what are the like practical challenges? Like we've talked about sort of how the salary can affect, both the saving the deposit, but also the level of mortgage, you can get. What are the more practical challenges that sort of we face as Sapphics when sort of wanting to buy a home?
Speaking half in my capacity as a mortgage advisor and half as a Sapphic woman, the challenge, the practical challenges I hear about and have experienced have been the frictions potentially faced in engaging with professionals that are perhaps not as inclusive as we'd like them to be. I've seen that with a sort of lack of respect or lack of respect with Sapphic couples or Sapphic individuals viewing properties, making an offer. Sometimes there's friction with the questions, who are you buying with? Are you buying with a partner? The assumption that there's a man in the picture, a lack of respect for two women buying together. Are they, friends? Are they sisters? These sort of frictions that I hear, sadly, too often can make that home buying process a bit difficult. In terms of the mortgage advice side of things, my role, of course, is to manage expectations and be that link between a lender and a client. And sometimes for me, that means I'm saying, I'm recording your preferred name, your preferred title, but this lender doesn't have that option on their drop-down menu. So I'm sorry to say that is the case, but which title most aligns, most resonates with you? So they're uncomfortable things that Sapphics may face during the house buying process that are unpleasant And I hope things, of course, will change over time and improve over time. But that's the reality that I hear and see.
And and is it the same for sort of employed and self-employed in terms of you're really looking at that salary and, the deposit, or I'm sure it probably changes, doesn't it, a little bit maybe for the self-employed.
Yeah, self-employed income is calculated slightly differently, and generally speaking, lenders will ask for a bit more evidence, so evidence over a longer period of time. Employed work fairly easy, usually 3 months pay slips for a permanent employed member of staff. For a self-employed person, there's one big high street lender that will take 1 year's accounts, but most will ask for a minimum of two. Where
Mm.
that affects Sapphics, who, in reference to starting a family, may have taken time out from work, that self-employed income may have taken a dip. So that too could affect that borrowing capacity. So really, having an advisor that's looking after you to navigate what documentation is needed is where I step in and can hopefully remove some of the frictions there. But that is the reality of the difference in how self-employed and employed people are treated.
Okay. Yeah, no, that's really, and I think this is maybe a good time. I've got a little poll that I'm gonna just pop up about self-employed and employed, because I think it'd be good for us to know um, who is employed and self-employed, so we have a bit more. So let me just okay, so that should have appeared somewhere. Okay, people are answering it. That's great. Um, Okay. So, we've got currently everyone employed.
Like, I will note that I know Neve has mentioned in the chat that they are currently unemployed, so that
Okay.
wasn't an option. So that was our
Yeah,
answer
apologies.
question.
Apologies. Yeah. Yeah. Okay. Thanks. Thanks for that, Davinia. Okay. So, okay, that's good to know. So, a couple, yeah, of self-employed, unemployed, and majority employed. Okay, let me end that poll. So obviously, we've spoke about the sort of gender wealth gap. We've touched on the gender pay gap with you, Alan, how that affects us in terms of buying a house. So, Divinia, like you're kind of the guru when it comes to the business side, the accounting side. So, is it really as simple as you need to ask for a pay rise or not?
I wish, I wish. Um, if I could wave a magic wand, it would be that everyone receives equal pay for equal work wherever you are, whatever you're doing. Um, Sadly, as you've already said, we can't change the system yet. But there are definitely things that we can do. So a lot of financial advice kind of does focus on, earning more, cutting costs. And yes, that is a really important thing. The pay gap, really interestingly, that you see in employed workers between men and women actually carries over into self-employed work as well. So a recent study showed that it was about £51 a day less on average that a freelance woman would charge compared to a freelance man for the same work. And it was a bit, 50 quid, that's fine. But over a year, that's about £12,000. And so that gives you, an equivalent in the employed world, that will start to stack up very, very quickly. And as Verity says, the earlier you can start putting extra in, if you could put in, 50 to £200 a week into a pension, that would make a huge difference to you in the long term. So if you are, self-employed or employed, I will absolutely implore you to, see if you can nudge things up or ask or, put yourself forward where you can if you're in a place where you feel comfortable. But I know that in the chat earlier that I can't remember who it was, said that, in the workplace, it generally can be a struggle for diverse talents, generally and can be overlooked for things like promotion. So you have got those challenges. So being aware of your worth on a day-to-day basis, trying to benchmark your salary, getting evidence to support you is really important. If you are self-employed or looking at freelance, or, currently unemployed or sadly being made redundant, and I'm really sorry, Molly, that's rubbish, and looking at potentially shifting where you are, again, make sure you're reviewing your rates and what you're charging regularly, because it's very easy to set some rates, set your prices, and then not change it. But minimum wage does go up every single year. All your bills, electricity, everything else goes up every year. So your starting point, your daily rate or project rate, whatever it is, should also be going up. But interestingly, what I've seen from talking to not just small business owners, but employed people, is that actually suddenly earning more money doesn't necessarily create more clarity. And yes, it might mean on paper it's easier to access, for example, a mortgage, as I was talking about, but you don't necessarily have the systems in place to help you manage that money on a day-to-day basis, which means it'll be difficult for you to save up for the deposit or for the fertility treatment or whatever it is that is in your kind of timeline over the short run. So financial stress isn't just about earning more money and trying to fix things. I think it's really important that you get financial capacity and capability. So you're understanding your numbers, where your money's coming from, and also where it's going. So what's happening with it. Because I know plenty of people who are earning good money on paper, but still get anxious because they don't actually know what they can spend, or, haven't necessarily mapped out their plans for the future to know what they should be looking for. So that avoidance, that kind of ignoring or kind of putting things off, is completely normal. You're not on your own, but it can be really expensive. So it's really important that you are trying to take control of your finances kind of right now, whether employed or self-employed, however that is, and getting clear on what you need day to day, but also what you want longer term, financially for you. And that's getting clear on your goals and having those conversations about, what's happening with, children, houses, holidays, whatever it is, wherever you want to be spending that money. So, I talk about like an enough number, and I'm sure, this will probably tie into what Elle might talk about, but there's doing budgets and it can sound quite scary, but really it's just a plan for what you want to spend money on and where you want your money to go. So online banking apps with the kind of savings pots and things can be really useful if you're self-employed, always making sure you're saving up for tax and taking that into account. But also thinking about whether, what you're getting is worth it for what you want to be doing. So swapping out the vodka for your pension pot, making those sorts of decisions are things that we do, I have to think about, because it's about not just, the money that you've got now, but it's that kind of near future, as Elle's been talking about, and that much longer term future, as you've been talking about, Verity.
And I think, you've just confirmed what we've all been saying. And the reason, coming back to sort of the reason we're having this conversation, is because we're in a system that doesn't serve us. And so we do need our money to work harder. And to get there, we need to feel empowered with our money. And and it can be scary, but that is like looking at the bank account and, like you say, looking at the apps, using the apps, looking at where the spending is going, which is uncomfortable sometimes. But, honestly, it's one of the best exercises that you can ever do to feel empowered as a woman, and especially as a woman in our community, to make the changes now that can affect you over the coming decades, And I think you said something really interesting, and I think it's come up also with what you said, Elle, in terms of this saving for a house deposit or, having a baby. And we do have to make more sacrifices, because of the typically lower wages, breaks, we have to pay for more. I think there was a fact about how, on the NHS and still in a lot of areas, a sapphic couple would have to go through 6 rounds of sort of trying to get pregnant, which could cost up to £10,000. Whereas a heterosexual couple would just try naturally for, 6 months or whatever. And, that's a crazy difference. And I think the important thing is not to take away the joy from our lives through the sacrifices that we have to make, the additional financial challenges that we have. And that can be tricky sometimes. Like you say, Davinia, like you're trying to make the right decisions and invest and put money in the right places. But I think it's also important to remember that we need the joy as well. And that's where doing this kind of work can help us balance that, isn't it? It's not just sort of throwing spaghetti at a wall and hoping it sticks. It's knowing, oh, I have this much money each month spare, and I can spend that on fun. And it's those types of things. While that goes to the house deposit, that goes to the baby stuff, and thank you for everyone's comments in the chat, which we're trying to keep up with it. And I appreciate some of you being really vulnerable and sharing that you're about to become redundant or that you're unemployed. And, as well as this being an inclusive space for however you come, that's also something, I'm very passionate myself about working with women from, not as privileged backgrounds. I'm working class myself. And so we want this conversation to be accessible to everyone. So we'll make sure in any follow-up resources that we also point people in different areas and different levels of their life to different places. So I think that's really, really key. So if we've got kind of 20 minutes left, I know we've got a couple of questions that have come in. I know we have some questions that came in prior to us starting the webinar. But if I was to ask both of you sort of a practical, realistic action that the women on this call could, once it's finished, do over the next coming days that could make a really big difference, what would that be? I'll start with you, if that's okay.
Yeah, absolutely. Perform an audit, and I know an audit is a pretty unsexy word, but
I know what you're talking about. It's a great word.
Says the accountant.
As we've touched upon, and actually, if you're up for it and you're geared up for a whole financial audit, then, incorporate the pension into that. But for me, for the mortgage side of things, understand what income you have. Certainly for a self-employed person, understand what those tax year-end documents mean, and have a chat with your accountant, have a chat with Davinia, and understand, what the numbers mean, essentially, what your income looks like, what your outgoings look like. Understand your liabilities. I have to record credit cards, personal loans, I have to record cars, PCP or a lease, and things like Klarna and PayPal. They're so easy to use and so easy to utilize, but those are the types of things that I'm recording. It's also worth looking at your credit report as well. It's usually during that mortgage advice process that people find that there's a bit of adverse from a previous address where a car parking ticket was sent to, or BT didn't close the account, something like that. It's worth being on top of that as well. So that would be my guidance, to perform your own little audit and understand what that looks like. But really, Verity, as you were talking, the word empower was what was bounding around my head. We've talked about the practical challenges that may face Sapphic individuals or couples, but we're here and we are, albeit part of a perhaps smaller group of professionals that really want to advocate and support Sapphics. But this isn't here are all the potential difficulties that you may face. We are here to support, and I'd encourage, as part of my practical action, once you've done your audit, is to lean into an advisor, financial planner, or an accountant, ideally all three. That there is help and support, and there is the opportunity for somebody to spend that time with you to unravel things that feel overwhelming or difficult or whatever. So yes, my one practical tip would be understand what your finances look like and what your credit score looks like as well.
Yeah, sounds good. And there's many ways of doing that. It could be a notebook, it can be a spreadsheet, it could be a fancy app. Like it depends on sort of how you work best, isn't it? So there's not one size fits all. It's up to you in what works. And Davinia, how about you? What's your practical action?
I would build on what Elle's just been talking about and say it's you need to kind of look at where you are. So, do the audit if you're trying to save for anything, whatever that happens to be, what are the subscriptions that you had in there that you've maybe forgotten about or that you don't need anymore? Are there any of those things that you can start getting rid of? If you're paying for something that you don't really need, can you put that 8.99 a month into a savings pot, little bits to get started. But then think about actually what does enough look like for you? So, whether you're self-employed or employed, you might be chasing or feeling that you've got to chase kind of pay rises and 5 figures or 6 figures and all this. But for you, actually, what kind of life do you want and where does that need to be, particularly when you're thinking about childcare responsibilities? Is it, working 3 days a week only, during term time type thing? And how is that possible? Because if you start getting clear on what you want enough is, then you can find ways to get there. And as Elle says, with the support of, the right mortgage advisor to help you get the right mortgage and fit that within what's possible and to save for a pension, in the right way and hopefully get you to a position that you need to be. So, yeah, take the audit, start with the audit, but then build on that a little bit more if you can with thinking about actually the kind of the goals for the life that you're living now. Because as you said, Verity, we need to enjoy it
Yeah.
while we can. So where would you advise them to go next?
Yeah, and just to sort of go over that, I think that enough question is so important. The amount of times I hear people say, "I need more, I want more," but how much more? And again, it can be uncomfortable to really look at the facts, but it's really good to have like a figure or a rough figure that you're going to aim for. Otherwise, you just keep going and go. And this is, I suppose, what capitalism is. It's just continuous growth. And you maybe get to a point and think, oh, actually, this hasn't brought me what I want it to. So, yeah, 100%. I think that's important. I think for me, there's obviously completely agree with what you both said. There's two key things for me. I think I've read a lot recently about how Sapphics, there's a lot more risk of financial instability. There's a lot more risk of poverty in certain reports. And so for me, it's building that emergency fund. So when things do happen, we're not turning to Klarna or PayPal by 3, which I think is the devil's work, or credit cards or whatever it may be. We have an emergency fund, which we normally say 6 months of committed expenses. So anything that really can't be cancelled, bills and rent and food, etc. To build that up in your bank account, and that you may already have that in, or it may take you a while to build that up, and that's okay. But that means then you've got some form of financial stability. And not only is that great from a financial point of view, but from a psychological point of view, you kind of step out of that survival mode and you're able to make sort of better decisions. So that would be sort of the primary thing for me. And then following on from that is really understanding those pensions. So, as Davinia mentioned before, compound interest is a powerful thing, and this is how our pensions grow. And, a small decision now, no matter what age you are, 25, 35, 45, 55, even beyond, can make a difference in terms of the wealth that you have when you retire. And we really have to make our money work harder for us as Sapphics because we are disadvantaged financially. So that emergency fund and getting to know your pensions a bit better. Let's be nicer to pensions. I know they're boring, but they look after us when we're old. So
Yeah.
Um,
Emma's asked a question in the chat.
yeah.
So she's asked, how do you decide whether a certain question needs an accountant or financial advisor or a, wealth planner? Basically, how does she choose between us three wonderful women? That's what she's asking.
Yeah. So it is a tricky one. I think it can be a bit confusing. Davinia, what's your point of view of this?
I would say anything generally to do with where you are right now and what you are currently doing. So, for me, as an accountant, most of my clients have their own businesses, whether they are employed within those businesses or are self-employed, and are having to deal with the kind of day-to-day kind of business challenges of either themselves as the business or the business that they are running. And that's where I specialize. So it's doing the kind of compliance stuff or the kind of business coaching to grow a business,
Hmm.
and thinking about what they're doing. Things like mortgage advice, pensions advice are all regulated. So that's when, if a client asks me about those, I would say, yeah, pension's a great thing, but you need to speak to Verity, or, oh, I need to sort out my earnings. I want to buy a house, but you need to go and speak to Elle. So they're kind of quite clear. But I don't know if there's any other areas that, you know, that you kind of specialize in, Elle, or that, people should be coming to you for.
I'm a piece of the pie of the bigger, the bigger financial puzzle. I'm working with clients who want a very early stage to get their ducks in a row, to understand what figures you've given them, Davinia, on their current circumstances, and how that may translate into a mortgage. So from somebody who's, ready to find a property tomorrow, I'm working backwards a bit to somebody who says, what does this mean for me? And when I present them the answers based on those figures that you've provided, what can they get now? Do they need to save a bit more? Would a little bit extra of business growth or income get them what they want? So I step in for those snapshots of time, and likewise any figures for now. A chat with an accountant. Where I link into a financial planner or a financial advisor, if a client comes to me and says, should I be overpaying my mortgage, or should I get a smaller mortgage because I've got this money sat in my account, that is when I sort of step aside and say, look, this is a conversation for a financial planner or advisor.
Mm.
But I think the reality of my client base, and I hope you, Verity and Davinia, will agree, actually it's a sort of three-pronged approach. And actually many of my clients speaking to me have an accountant and have a financial planner or advisor. And between us, we're a little sort of financial team that will sort of sit in the background and help a client along the way.
Yeah, we all overlap a little bit, don't we? And can I ask you, Elle, because I always find people ask me this question, when should somebody be starting to talk to you? At what point in their I want to buy a house journey is the ideal point for them to start chatting with a mortgage advisor?
Ideally, at the point at which you are wanting to go out and view properties, it's really important to have some peace of mind that you've got a decision in principle in your back pocket, so you can go out and view with confidence and know what you're going to negotiate. For those that have a few more questions about how things work, I do hear from people earlier. So a small proportion of my clients I actually won't work with for sort of 6, 9, 12 months, because they've gone away and said, actually, the figures you provided aren't what will get us what we want. We're going to save a bit more. So anybody with any queries, concerns, anxieties, that there's no barrier to reaching out. But realistically, I recommend that the point at which you're going to view properties or wanting to view properties is the point at which you have the money chat, the mortgage chat first.
Okay, that's interesting. Yeah. And I think just in terms of like holistic financial planning, it's probably more that bigger picture stuff. Like we work up until the age of 100. So all our scenario planning goes up to that, depending on no matter what age you sort of start. A lot of women start financial planning like after a big transition, so retirement, divorce. maybe having a baby, when they really want to get clarity on their current money and how it's going to look in the future. And kind of maybe compare some scenarios. So, like, do I pay off the mortgage or do I invest that money or those types of things? And that's like you say when you pass someone to a sort of planner. So yeah. So hopefully, Emma, that has answered your question a bit more. Davinia, can you recall any other questions in the chat that we need to kind of just
Yeah, as
highlight?
I say, Neve asked a question. They are currently unemployed and on PIP, but they asked about, it was when we were having about the pensions chat. So I don't know
Mhm.
if, you know, can you start, saving for pension? Would you have any kind of advice of things to consider? Obviously, I appreciate it's going to be quite difficult, and this is not tailored to particular people.
Yeah,
In general, when you
yeah.
are kind of in a low income situation, what, you know, might be some practical things you can do?
Yeah, I mean, again, I'm going to send some resources of some services out there who will probably be able to guide better. But ultimately, like I said before, it is around what is your disposable income. Like we've all said, like really looking at what you're getting in, what's going out. You know, one of the sort of questions that we got in before from the forms was about sort of, minimum wage and versus the real living wage. And we know there's a disparity. We know there's challenges for many people with the cost of living. And so we have to be realistic about what we can contribute. Contributing to a pension will be able to aid you in your retirement, but maybe that is not something you're able to do at the minute. So it really is, again, assessing where you're at, what your incomes are, what your outgoings are, um, and what type of outgoings they are. Is this in survival mode, or are there things like you said, Davinia, that can be cut and put in a different place? So, yeah, I'm sorry that you're in that position, Neve, and I will send resources when we share the video that hopefully can give you a bit more guidance, if that's okay.
Amazing. I'm pretty sure we've covered everything else that was in
Okay.
there.
I think there
If
was
we have
just
missed anything, drop it in.
yeah, there was just a little one. Any advice on things like Money Box app for small investments? So the one thing I will say is there are loads of opportunities to invest, and it's more and more accessible. And there's so many ways you can DIY it, etc. I think the thing that I would like to raise as a point, though, is understand your pensions first because they're invested. And I think there's a lot of dialogue at the minute of women need to start investing, which is brilliant. But we're ignoring our pensions, which are already investments, which we have money in. And also, understanding your pensions is a great way of then knowing how to invest. And of course, you can work with a financial planner, but there's many ways that you can also do it yourself. So I would say try and educate yourself through your pension, and then I think you'd be in a much more confident position to invest in other areas as well. So okay, let me see if there's anything else. I don't think is if anyone else has any other questions, please put them in the chat. Like I said, we had a couple of questions previously. One actually, Elle, was around fertility, and someone said, it's quite heavy having to save for the fertility and how to do it. And I do think this is maybe a wider conversation that needs to be had because I do think it's a consideration for a lot of Sapphic women and the additional sort of cost that can bring with it. Um, Let me just have a look at the other questions that came through. Is there anything else that you two would like to add? I'm going to actually share my screen with our contacts. So that's up again. 1 second.
I think I'll just say, and I have no doubt that you two will kind of echo me, but for anyone here, if you have got questions or follow-ups, reach out and ask us. If there are things that we can answer, we will. If there's resources we can point you towards, we will. If we can't help, we may know someone who can. So, as Verity said at the beginning, the whole goal is to start creating, kind of a supportive community. And it's not about having to, pay us for advice or anything like that. If there's questions that we can help point you in the right direction for, we are here, and this is the first step to helping. So please do just get in touch.
Yeah, 100%. And sort of on the back of that, we're going to share in the chat sort of places that you can find us if those QR codes aren't working or whatever it may be. And something that I have sort of want to start myself is a community for Sapphic women to talk about money. So that's going to be one of the links. It's called Sapphin. I don't know what it's going to look like, but I've said on the page I'm a Cancerian, introvert, highly sensitive person, so I will not be bombarding you with any form of communication because I don't have it in me. So feel free to join that, and it's just sort of a safe space that we can build and stay connected, and you can find out about other things. You can find us on LinkedIn. We've got websites. So the best way, whichever the best way is for you to communicate. So we'll just pop that in the chat soon. I'll just wait to see if there's any further questions before we close off. I'll just stop sharing this. Okay. So yeah, I feel like we've covered everything. I'm just going to share the contact details one moment, and then you all know where to find us. Um, okay, here we go. So let me pop these in. So yeah, so these are our contact details. So I'm Verity, and Davinia is our accounting and founder of Damn Good Business, and we've got Elle, who is our mortgage advisor. So feel free to follow us, message us, contact us. Oh, women's football's on tonight. I like it. It's
England's
very. Oh, really?
My girlfriend's up there at the moment.
Oh, I love it. I love the Sapphic core. Yeah, so feel free to reach out. Any additional questions, anything that we didn't answer, again, there'll be a follow-up email. We will share the recording. And yeah, thank you so much for all being here, and we wish you a wonderful evening. Thank you, everyone.
Thank you.
Thanks.